Hey guys, today we're talking about Tesla. Yesterday they just came off a pretty bad earnings report and dropped like 12% just yesterday, the 25th of January. And so we're going to talk about Tesla, how they're looking moving forward. And we brought on Daniel Wu from Pair Lending. And Daniel's a great guy to talk to because he's been with Echo Trade for a couple of years and been number one, number two performing portfolio for at least a year or two now. So perfect guy to talk to. Let's jump in with Daniel. Hey, Daniel, it's good to see you. Been a while. Happy New Year.
Happy New Year.
Yeah. So, hey, we're talking about Tesla today. Like, they just come off earnings report yesterday, really underperformed compared to what analysts were expecting. They're kind of warning for slow production or slower production in 2024. So, what are your views on the earnings report on Tesla moving forward? Are you still, bullish on Tesla? Is it still a buy for you, or how has your viewpoint, kind of changed from yesterday's earnings report?
Well, basically, we do have a position on Tesla, and certainly is one of the leaders in AI, especially in EV vehicles and also the full self-driving. Yeah, we have a high expectation, not only for Tesla, but also for the industry related to AI. However, due to risk management and position management, at this point, we putting Tesla into a hold rating, meaning that we try to hold on to it and maybe even trims its weight on a portfolio. That way, we can have a more steady portfolio uh, volatility as well. And so, yeah, so in the next few days, and we're going to implement the changes, especially we're looking for other possible holdings to rotate. But just focus on the earnings on Tesla and has been very visible. And then one of the heavy companies that people looked at the earnings to give guidance to the whole market and also for the sector. Of course, for this year, our market has been a little bit struggle, especially first 2 weeks of January. However, the mega stock, especially the seven magnificent, including Tesla, has been moving up as a group. But certainly, Tesla has lagged even before the earning. So yesterday it came out with earning and the stock dropped 13%. And mainly, there are a couple of concerns. Just on the number side, the margin has been decreasing from 26% to about 19%, and which is well expected because when you produce more cars and competing with global auto manufacturers, and you want to expand the market share, and dropping the price is one way to do it, but also that's at the expense of margin. So that's the market is kind of bearish on that. And secondly, the growth of the company, especially on delivery, is a little bit lower for 2024, even though we do have some new vehicle, probably the new model that gonna line up, especially with Cybertruck is started to deliver. That might kind of neutralize some of the negative impact. I think the positive thing that we look at is that there are about 33% cash flow on hand, which meaning that the company is still operating healthy in terms of cash flow. Cash flow is very important for growth company. So we are kind of bullish in the long term, mainly because the full driving update, as well as Tesla is also focusing on the AI, which is hopefully they can deliver this product sooner. The humanoid called Optimus. So we have a high expectation, but that wouldn't come in the next quarter or two to really help the earning, also kind of the overall company profitability. So given that, for the short term is bearish. Also on the back end, we know that the CEO Elon Musk kind of having some conflict for the control company. He wants a little bit more control.
Mm-hmm.
And so that's something that is not very friendly with the stockholders, stock market. And given the fact that all the happening, there's something that we need to know because Tesla has been more volatile among the mega stock companies. It also lacks the overall market trend. So in that regard, it's not the best company to hold in terms of performance. However, for portfolio management, we always look for the future. And if the future doesn't come as quickly, we're going to suffer in performance of our portfolio. Therefore, we have to trim its holding based on the safety side of it. In our portfolio, we try to put our focus onto safety first, growth second, because the portfolio itself has a very high growth orientations already. So any setback in the short term can kind of affect our performance. And
Yeah.
so aside from the earnings, I think we also want to pay attention to the current momentum. It seems a little bit loss of momentum on the high tech as well as the mega stock as well, because it led the whole market last year, and this year starts a little bit slower, and we see that some of the traditional stocks and mostly they reside in the Dow Jones sector. They try to lead. So this kind of rotation leadership also give us some feedback and whether or not and how soon we should rotate our portfolio toward align with the market directions.
Yeah, so it's interesting to kind of recap, and this is kind of what I was expecting maybe to hear from you, but basically you're looking at short-term bearish on Tesla, driven a fair amount, I guess, by the earnings reports and kind of the underwhelming report and the lack of production in 2024. But you're still bullish long term, correct?
Correct. Yes.
And so with that though, so if you're looking at holding for a 5-year, 10-year outlook, then you might just hold on to your position. But you're trying to in the short term mitigate some of that underperformance by trimming the position. But you're not calling for an outright abandonment of the position, just scaling back the position and adding some other opportunities in there.
That's correct. Because I think Tesla, in our view of it, thinks that it's pretty significant in terms of the AI sector, and that seems to be the only game that in town, and not only from the vehicle side, but also from other applications of AI. So certainly, with any applications of AI into the business in that scale, it certainly can turn around to show a positive business results for companies like Tesla. And then because our portfolios, as the name suggested, it's a pivot point investing. So we also look at any pivot points or turning points in terms of earning momentum and also price momentum as well. And that will force us to adjust our position. But in long-term wise, we are bullish, especially for like 5-year time horizon.
Yeah. So it depends basically on your time horizon, on whether you want to, just stick with your position or even add to the position or scale back or even offload, depending on if you're more short term. And I'm curious also, like you mentioned, 2023, very tech led, you're still looking to see a potential pivot to a more kind of broadened base for growth in 2024 outside of tech, but you still haven't kind of seen that pivot point just yet. Is that what I heard?
Yeah, exactly. So I'm trying to be careful to see the market turning around, especially with so much gain for the sector, for the market as well, because any setback could be pretty fast. And also, I'm not sure the magnitude of the setback, how much is it? So kind of adjusting the position at the right time is crucial. So I think this year we expected the market will have more broader participation if the market does start to or continue to go forward with a bullish outlook. But so far, I haven't seen it yet. I see that lots of company release earning, and then the multiple has not been adjusted, meaning that the market is not bullish enough to give higher multiple. Because last time we checked, S&P 500 was at a multiple of 17. That was back in October last year, and now probably edged up a little bit. With some company has increased earning and some company decreased earnings. So kind of mixed picture. So it's not one direction. The market does not have a clear vision how the earning will play out and whether or not the economy is strong enough to propel all the earning sectors. And therefore, it deserves a increase in multiple for the market. So I think at the current time, the market is looking at 2 or 3 year time horizon, still trying to evaluate the earning part of it, and together with the sensitivity of interest rate going up and how much earning to compensate for the negative impact on the company's valuation. So we're still in that stage, and hopefully in the next quarter or two, and things are more clear. So the quarter earning has been pivotal in terms of the guidance for the market. So we also focus on this quarter and next quarter, especially to see how those momentum will kind of factor into the price of the stock valuations. But in short, we're looking for broad participation in the market, and then also especially looking at the financial, because that's one of the sectors very sensitive to the change of interest rate and also interest rate expectation. In this case, we're expecting interest to go down gradually starting maybe in June.
Yeah. Yeah. It's interesting, like you're talking about, you still have an expectation of a broadening of the market, outside of just, growth in tech, but you're waiting for actual signals that that's happening before you're going to make a change. So you can make all the prediction and expectations you want, and analysts can come out with their predictions, but you're not going to make it a change based off a prediction. You're going to make it based off a reaction to what's actually happening in the market. And so that kind of leads me to another question in terms of just more broadly speaking about, we're talking about Tesla and their earnings report yesterday. So, and that's kind of, adjusting some calculus on what you're doing with the position. How do you, so we don't want to have one earnings report necessarily kind of dictate exactly what we're doing maybe. But so how do you kind of use these reports and this information to make decisions within the portfolio or on a specific position?
Well, basically, I think the report is really what drives the market sentiment, and therefore gives the support for market decision whether or not to hold it or add into it. The price itself will reflect what the market thinks, and then the earning itself only is a input on this kind of decision making. And we also look at the performance, or actually the price action of the stock, to the detailed extent of whether or not we have a confirmation on signals. And I think we cover the way we make decisions for stocks or even any sectors or indexes. We do use technical analysis with a software of our own as a proprietary signal that confirms when is a pivot point that is awry. Then we're going to take actions upon that time.
Fantastic. Yeah. And again, the portfolio on Echo Trade, growth and market pivot points, performing fantastically. So really insightful. Appreciate the being able to pick your brain, Daniel. And investors, if you don't want to take the time to figure this all out for yourself and trade on your own, our platform Echo Trade, lets you copy professionals like Daniel. So he's got his portfolio, growth at market pivot points, performing fantastic. You can go and basically copy what he's doing in his own account. But Daniel, appreciate the time. Have a great weekend.
Great. Thanks, Jeff.